Strategy wants STRC shareholders to receive dividends twice a month without changing the annual payout. The goal is to smooth price behavior around a $6.4 billion preferred share product tied to a Bitcoin treasury company. Strategy plans buy centers on a proposed STRC dividend schedule change meant to reduce volatility and improve liquidity while keeping the annual rate unchanged. The first thing to separate is the trigger from the consequence, because the same event can affect users, traders, companies, or regulators in different ways. In this case, the pressure is specific. For Bitcoin treasury investors, STRC shows how crypto-linked companies are using traditional instruments to shape demand beyond common stock. That gives the story a clear reason to watch without turning it into a prediction. The anchor is not a mood shift. It is strategy proposed allowing 2 dividend payments per month for STRC, pending shareholder approval. The confirmed details are concrete. Strategy proposed allowing 2 dividend payments per month for STRC, pending shareholder approval. The company said the current 11.5% annual yield would not change. STRC in circulation reached $6.4 billion at the close of the most recent application period. Those pieces matter together because one fact shows the event, another shows the context, and another shows why the market or user reaction was not random. A broad crypto audience does not need heavy jargon here. It needs to know which actor changed behavior and which part of the system now carries more pressure. The mechanism is straightforward. More frequent dividend payments can reduce the lumpiness around payout dates, which may help liquidity and limit cyclical price swings. STRC volatility was as high as 13% in its first 8 months and dropped to 2.1% in the last 2 months. In plain English, the mechanism is the path between the headline and the real-world effect. If that path is weak, the story fades quickly. If that path is strong, the event can influence liquidity, access, trust, compliance, custody, or infrastructure beyond the first reaction. Timing also matters here because the company said the current 11. That context can make the same development more sensitive than it would be in a quiet market. The affected group is not the same in every story. For Bitcoin treasury investors, STRC shows how crypto-linked companies are using traditional instruments to shape demand beyond common stock. The shareholder voting period is set to conclude on June 8, with a first bi-monthly dividend planned for July 15 if approved. This is why the strongest reading depends on the exact channel of pressure. For some stories, that channel is exchange access. For others, it is a balance sheet, a court filing, a wallet movement, a bridge, a vault, or a central bank signal. Here, the important channel is tied directly to a proposed STRC dividend schedule change meant to reduce volatility and improve liquidity while keeping the annual rate unchanged. The unresolved part is narrow but important. The vote is not finished, and the actual impact on volatility will only be visible after the new schedule runs. Strategy plans buy should not be treated as proof of the final outcome until the missing piece becomes visible in public behavior: filings, product terms, wallet movement, or market data. That distinction protects viewers from reading too much into one move while still respecting the fact that the move can have real consequences. The strongest confirmation would be the June 8 shareholder vote, July 15 payment timing, and whether STRC liquidity improves after the change. The practical close is to track the observable signal that matches this exact story. If the signal appears, the event can move from initial reaction into a clearer market or user consequence. If it does not appear, the story may remain limited to positioning, operational changes, legal pressure, or short-term sentiment. If strategy plans buy keeps developing, that signal will show whether the event becomes a lasting shift or a short-lived market reaction.